Hello everyone, welcome back to the channel. CoreWeave is headed into the exact zone that I called out a few weeks ago. My goal was to stop people from entering this ticker symbol around $100-$110 area because there was a clear indication that we were going to head lower, and I understand a lot of people do not see that sometimes because technical charting is not an easy skill set to develop because it takes a lot of time, a lot of patience, and experience with different types of market cycles. And if you are somebody who struggles with FOMO, struggles with understanding supply demand zones, I'm putting together a community in a few months where we'll go over all tickers. We might put in some educational content in there, but my goal is to keep you out of the market as much as possible and only enter with sniper-like precision so we can profit off the market with 2 to 3 setups a year. The registration link is in the description and in the comments below. With that said, let's discuss why this stock was meant to revisit $63, $64. And it's mostly because we tried to bottom out on this exact region, but we finally broke out above this downtrend. But clearly, there were key rejection zones around 110, 120 area. You can see that the weekly candles like this one, and this one are showing no strength whatsoever. Every time the stock breaks above 110, we see supply coming in and the stock gets rejected. And in most cases, this could look like a true bottom, but just because of these rejections, I started to quickly realize that we are not meant to break out just yet. There was also a theory going around in the markets that we are creating this downtrend where we will break out of and then we'll revisit it and then go back up. And this is exactly the reason why I'm putting this community together, is because people do not have the technical experience to understand that this might happen once in a blue moon, but this is not how technicals work. Most likely, if this setup is to play out, we will go up, come back down to revisit the previous low, we'll sweep this level out and then continue higher. And you might ask, what might be the reason for this to happen? It's because if institutions were to buy large blocks of CoreWeave, they will probably need it to go into a zone where most people will get stopped out. So there's a massive flush of liquidity. People are exiting while they are purchasing the stock. And if we look back for last 13 to 15 months, the stock has never gone below $63, $65 area, and we have printed some very bullish candles on the low as well. So all the people who purchase the stock here will probably think that we're about to flush lower and this is the end of CoreWeave. And in that mix of supply and demand, in that liquidity flush is where institutions will be able to purchase their positions, and the stock might do something like this. We go down, we continue back up and never revisit this level, or we might go up, sweep this level again to freak out more people, get more stop losses out, and then continue higher. Now, this is an A+ setup in my opinion that is skewed to the upside, but the reason I'm very careful with this one is because there's too much debt that CoreWeave has taken. You can see this morning that the Korean stock market has gone down about 8-10% or something, about 8 to 9 halts, and you can see that SPY and QQQ are reacting and they are coming down. We are also in a midterm year where I expect a 10 to 20% correction on SPY as well. And if we are under $60 on this stock and that pressure continues, we might see CoreWeave going even lower. So this is an A+ setup, but when you add their debt on top of it, the fundamentals and the SPY QQQ pullback, and then the midterm year volatility, you have to be extremely patient and extremely careful on the stock like this. I am not sure if I'm going to take it. There's an 80% chance or even a 90% chance that I don't even touch it. I'll have to see the price action under 63, 64 area. And if we do see the midterm volatility that I'm expecting in the next 2 to 3 months, there might be some very, very good stocks that are healthy companies growing 30, 40% a year that might give me a better position trade to take a 50 to 100% winner off of. On my channel, you will never see me say that I know exactly where the stock is headed towards. I'll just give you the best possible entries and still give you the risk associated with them so you understand what you're taking and what you're looking into. Right now, if I have to take a guess, I would say that there's a 65 to 70% chance that we reverse back up, and there's still a big chance that we keep going lower. And I did make a video about SPY and QQQ. Let's look at that for a second. Let's look at QQQ. I was talking about the fact that in midterm years, the indices have a tendency to come down and sweep their early year lows, which will be 550 on QQQ And if that happens, that is another 20, no, another 16 to 17%. So you need to overlap this with CoreWeave and see how far down do you think CoreWeave goes if NASDAQ slides another 15%, because this is not just a stock by itself. Everything is correlated with the stock market, and that is where rubber meets the road, because reality is very different than just doing fundamental research and taking the trade. So with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.